Well, getting back to one of our top stories, China's CITIC Bank makes its debut on the Hong Kong and Shanghai markets tomorrow. The IPO is the world's biggest this year. To talk more about it, Chaw, Director of China Knowledge Consulting, joins us for more analysis. Charles, good to have you with us. Are you expecting a spectacular debut, and what happens after that? Will it be able to attract or maintain investors' interest?
Because it's a bank stock, there's some sort of guarantee that you'll go up at least 10-20%. Already in the gray market, people are trading 5-10%. So it doesn't come as a surprise, 20% in a single day tomorrow.
What about BOCOM? If you look at the amount of funds that is attracting the amount of interest, is the interest in the stock justified? Do you like BOCOM?
Two things. First of all, I think most important is that too much cash savings among the Chinese. So it's a bank stocks, they'll punt, they'll go for it. Because it's the top 5 banks in China, I see a lot of potential because it's the best proxy to the economic growth. Look at the first quarter, 11.1%.
And Charles, it's Michelle here in the United States. Is that enough to support the stock, though, especially if the Chinese government starts to take more aggressive action to slow down the economy, which normally affects banks?
There's no clear indications they are very aggressive in curbing the growth. I think if the economy is going to grow at 10-11%, I think there shouldn't be any drastic or actions to have a big interest rate. Maybe a 0.2%, yes, there might be an interest rate increment. But other than that, they keep it as it is because let's look at China as a whole. Now, the Western concept of China growth, GDP growth of, let's say, 11.1%, they're so concerned. What's the concern about when the concept is not about the coastal city of Shanghai, Beijing, or Guangzhou. Look at the central China, the western regions, and the northeastern regions. They all are keen and, in fact, desperate to grow.
No concerns about the growth, Charles, I guess, because, as you say, the central regions are absolutely are firing it. I guess the concern is in that rush for growth, you know, how many bad loans are being made that we won't know about until some years down the road?
You see, you know, if you talk about 60 billion FDI a year in such a big country, it's not a big amount. And you know, domestic consumption is also something that the Chinese government is trying to do to boost the consumption. Now, let me tell you something tomorrow. For example, tomorrow I'm going back to Shanghai. Basically, you know, there's a golden week. I'm there to talk to the analysts there, and some of them are going there to buy houses. You know, this is one of the you know, the way that they're spending money. You know, the government is encouraging them to invest.
So are banks still the best way to play the growth in China?
Correct. Yeah, it's the best proxy. It's the safest of all, and somehow I think there's some sort of guarantee from the central government. It will not let the bank fail for sure.
Okay, Charles, we'll have to leave it there. Thank you very much for being with us today. And that was Charles Chaw, Director, China Knowledge Consulting.